What's going on, everybody? Welcome to the channel. This video is going to be all about stock indicators. So I'm going to go over a couple different stock indicators that are very important for all stock traders to understand. Understanding a stock indicator can really help you with trading. So I'm going to give you a quick overview of all these indicators and show you some examples and basically tell you what you need to know. All right, so make sure you watch this whole video to understand all the different indicators and how they can help you become a successful trader. All right, let's get into it. All right, first off, what the heck is an indicator? So an indicator is actually a mathematical calculation or a formula measurement that can give you information on a trend in a particular stock. Now, keep in mind, indicators are a technical analysis. They have nothing to do with really fundamentals, but they really have to do with trends and price actions and closing prices. So why should you know what a stock indicator is and what the important indicators are? Well, that's easy. So you can understand where to put your money. You can understand if a stock that you're looking at has an uptrend or a downtrend or a potential reversal that can help you invest and become a better trader. All right, so I'm going to go over 5 basic, important, and successful indicators that you should know. Keep in mind, they're in no particular order. These are all common stock indicators. I'm just going to really try to simplify it for you, especially new traders, things that I wish I had known getting into this game. All right, first off, we're going to go over the simple moving average, SMA. So the simple moving average is literally a trend's average within a certain time frame. Those time frames are typically 20 days, 50 days, or 200 days. That's where you're going to find on a lot of different stocks charts. So basically what you do is you add all of the closing prices within a certain date range, and then you divide it by the amount of days. And that would basically give you your stock average price. So an example of a simple moving average. So the sum of 10 trading days straight was $250. You divide that by 10 trading days and you have a simple average of $25 per share. So if that share is $26 at that point in time, it's broken the 20-day simple moving average. Therefore, it is on a bullish uptrend. Another moving average is the exponential moving average. The exponential moving average gives more weight to the more recent trading days. So the exponential moving average calculation is the closing price today times a weighted multiplier, which is 2 divided by the days plus 1 of a time period plus the previous exponential moving average. Every website pretty much does all of that for you. So instead of doing all these math problems, just simply look for the exponential moving indicator on any stock chart. So this is a chart example of bullish and bearish patterns on the 50-day simple moving average. So the orange line represents the 50-day moving average. Right here, this is clearly a bullish signal because it broke pretty strongly away from that 50-day moving average. But right here, it crashes through that line, which would indicate a bearish downtrend or a sell. Now down here, it breaks back through on an uptrend over this 50-day moving average. So this would signal a buy. All right, so here's a very simple exponential moving average sort of trend line. So this is a 200-day EMA, so clearly the stock is trading well below this marker, so that would indicate a bearish trend, and simply as it busts through that average, it's clearly a bullish trend. So overall, both the exponential and the simple moving average are great basic tools to determine general uptrends or bearish downtrends. They also give you an idea if something broke and is going to do something kind of new, or it also gives you an indication if something broke a trend, so therefore you can look for reversals. Another popular stock indicator that all traders should know is the Relative Strength Index. The Relative Strength Indicator, or RSI, is a momentum oscillator. That means this is a metric to measure whether a stock is overbought or oversold based on its value. So the RSI is a momentum oscillator that ranks from 0 to 100 to determine whether a stock is oversold or overbought. The RSI is based on average gains or losses. So what you need to know about the RSI, if it has a ranking over 70, it is in the overbought range. Now that doesn't mean it's going to go down. On the flip side, if a stock has a 30 or below rating on the RSI, it is oversold. That means it's trading at a price below its market value potentially. Okay, so here's a quick example of an RSI using an old Walmart chart. So overbought, like I said, is in the 70 range, oversold in the 30 range. Over here, this is the stock price rising, and it just crawls above that overbought range, and right after it begins to head south a little bit. So there's an example of being able to look at a trend and determining where the price of a stock is going to go. Over here, at this point in time, Walmart was on a downtrend and it crept below that oversold range of less than 30. So that would be a buy signal. And of course, over time, it goes up all the way to where we kind of started with the overbought range. So RSI is a good indicator generally to determine where a stock is in terms of the price. So an uptrend in the RSI is generally the 40 to 90 range with a support level in the 40s or the 50s. Support level, remember, is that magic invisible price that seems to kind of spring up the stock price, and it doesn't seem to go below that. On the flip side, a downtrend RSI generally is 10 to 60 range, and the support levels are sort of at the 50 or 60 RSI, meaning whenever it hits that 50 or 60 kind of area, it shoots down. That would indicate it's on a bearish downtrend. All right, third on the list is the moving average convergence divergence metric. So the MACD is actually a trend indicator that uses a two-system metric. The two-system metric is the 12-day exponential moving average and the 26-day exponential moving averages. So in addition, there's a 9-day exponential moving average, which serves as the signal line, which basically is used to determine a buy or a sell signal. Okay, so this is an example of the MACD. So the MACD is represented here, this blue line down here, and the signal line is this orange line. This line right here is a baseline, which is a comparison line. So what we really look for is when the MACD line crosses the signal line. When it crosses like right here, this right here is potentially an uptrend or a signal right there. And as you can see right here, the stock price went up. Now, on the flip side, it goes down right here. So what happens is the MACD line drops below this signal line. So you can see right here with the arrow that this might signal a bearish downtrend. When the MACD goes below this baseline, generally the distance between the two grows. This point in time right here was a bullish signal, a reversal, because the MACD line crossed the signal line on an uptrend and it went above the baseline. So this right here would indicate a bullish turn of events, and in reality, the stock price did go up. So just look for moving average convergence divergence lines to determine whether something is clearly on an uptrend or a downtrend. The fourth important stock indicator that you probably should know is the stochastic indicator. The stochastic indicator is very similar to the RSI. It determines whether a stock is typically overbought or oversold. It's also like the RSI, a number between 0 and 100. So the stochastic indicator basically takes %K, which is basically just the averages of the highs and the lows in a recent trading period, versus the signal line, which is %D, which is basically a percentage of values averaged over a certain period of time. What you really need to know is if it is over 80, it is overbought, and if it's under 20, it is generally oversold. Another cool thing about the stochastic indicator is to look for crossovers, reversal trends. This is a great indicator to determine whether a stock is about to change directions. So when %K crosses below %D, that is actually a sell signal. That means it might start to go down and start become bearish. On the flip side, %K crosses above %D, well, that typically is a buy signal. That means that instead of going in that bearish trend, it might start coming up on a bullish trend. Why do you want to know all this? So you can potentially get invested in a stock at the right time to maximize profit. All right, last indicator I'm going to talk to you in this video is Bollinger Bands. So Bollinger Bands are another great tool. And basically what it is it's two lines that go with a stock's trend. So the two standard deviations are derived from the 20-day simple moving average. So the closer a stock is to a particular band might indicate that it may do a reversal. If it pops through that band, then it may signal a strong trend, either up or down. All right, so overall, these stock indicators are so important for all traders to understand. To get a feel of momentum, price trends, where the price action is going, whether a stock is on a bearish trend or a bullish trend. And you also can use these to determine a reversal so that you can be ahead of the game. So pick a couple stocks and take a look at some of these indicators and just kind of practice kind of reading these indicators and the charts to determine whether you think these stocks would go up or down, and just write down what their prices are and see where they go. Do that for a couple weeks, get familiar with these indicators, and then you could probably use them a little better down the road. Now, as always, you got to do your own research, your own due diligence. These are just tools that can potentially help you pick that right stock. Nothing is guaranteed. The stock market is unpredictable, but you always want to kind of understand trends and charts before you invest your money, especially on the longer term. So I hope you found this video useful. Make sure you hit that subscribe button. Give me a big thumbs up. Leave me a comment if you have any questions or anything. Share this video to anyone who might need it. And I thank you guys for watching. We'll see you guys next time.